Nice to meet you once again. Our guest today is Olivier Blanchard. Welcome, Olivier. It's very important for us to have you among this theory of economy among us for learning economy. I shall introduce you first, and then I will ask you some questions, 3 questions, and then Cristina will take the end. First, you are an economist. You are French, but you have spent most of your life in the US. You have got a PhD from MIT in 1977, and after you have been a teacher and you have been chief economist of the IMF between 2008 and 2015. So you are very famous, you are a very important economist. Can you tell us more about yourself, or can we ask the first question?
I don't want to say too much about myself, but I'll try to answer your question. How did I become an economist?
Yes, my first question is why and when have you decided to become an economist?
So compared to some of my peers, say Jean Tirole or others, who went through the royal way, grandes écoles and so on, I was a mediocre student, uninterested student. And I was in the 3rd year of law and economics at Assas in 1968. And
in May 1968.
And I'm coming to this. Yes, this is an important month. And May 68 came, and I got very involved. I don't exactly know why, but I found it exciting. I rewrote the whole curriculum for economics with my friends. Nothing ever happened of it, but I did. I participated in the street events, and something clicked. I basically thought, okay, so these are really important issues, and I thought economics is kind of a social science in which you can use math to actually be very specific, very precise, and got very excited. And then I actually started working.
And you were Marxist at that period?
I was a Marxist. I was a Trotskyite.
Yes.
I was a Trotskyite. I worked as teaching assistant of Lionel Jospin, who was also a Trotskyite.
He was also a Marxist, a Trotskyite.
And I realized at some point that the limits of the French curriculum in economics at the university. And so I applied to MIT and got in by miracle, is my guess. And then I really got into it and became a good student, and then maybe a decent economist after that. So it really was May 1968. This notion that you can talk about really important social issues using tools. Sociology is very exciting, but you always feel you're a bit away from the flesh. So in short, that was it.
You are often reported to have been a student in ESCP.
I was.
Is it true?
It's absolutely true. So my parents were not exactly happy with the way I was studying in general. So they said, you can do what you want, but we would like you to do business school. And so I think in the 2nd or 3rd year of the licence, I applied to the ESCP to go directly into the 2nd year. I think they admitted about 5 people. I must have been number 5, but I was in.
Yes.
So I missed the 1st year, and then I got tuberculosis. Related actually to my social involvement, I got it from alphabetisation. And so I spent a year in bed, not at ESCP, which is what happens in this case. And then, so I missed the 2nd year, and the 3rd year was a lot of stage. So you can see how I probably didn't get all the substance that I could have gotten from going to ESCP. But I'm very proud of having gone there. But this was largely to please my parents, and it convinced me that I didn't want to do business. I wanted to do research.
You know, but ESCP is proud of you. Yeah,
No,
yes.
it's
So
reciprocal, it's great. I mean, there's no problem with that.
let's go to your theory and your ideas. And do you think that Keynes, who is you great man, do you think that Keynes is still the answer to the economic problems of the day?
Well, with respect to at least macroeconomics, I mean,
Yes.
there's micro, which is unrelated to Keynes in various ways. But yes, I still think that his influence on the way we think today is absolutely central, because I would basically offer two propositions which I think are linked to Keynes. I mean, he's not the only one to have said it, but he was the one who articulated it the best. The first one is, in the short run, aggregate demand dominates. So if people become very pessimistic or firms stop investing, you get a recession, which was a new idea because there was Say's law and the notion that supply creates demand, so why worry? So I think that idea is absolutely central to the way we think about fluctuations today, that they do not only come from shifts in demand, but they also they come largely from that. So I think that's the first thing. And he was quite explicit about the role of expectations, the fact that many decisions were taken looking forward. So, you know, there's something called the new Keynesian theory today, which is a group that I feel I belong to. And it has formalized these ideas. And I think the role of aggregate demand in the short run, going away in the medium run, leading to inflation or changes in inflation, and the notion that people look forward, more or less, consumers maybe less than firms, is really central to the way we think about macroeconomics today. So yes, the answer to your question is most definitely yes.
So for another theory, new classic theory and the works of Robert Lucas.
Prescott and Lucas.
Yes, yes. What do you think about this?
I think it was very useful as a transition device, which is, it said, I'll go back. So I worked at MIT. I had the chance to work with Samuelson. Samuelson was a good economist. He was an amazing economist.
We can say that, yes.
He was an amazing economist, which, you know, most of micro really comes from him and a few people. When it came to macro, he thought that the macroeconomy was so complex that basically you could give up rules about maximization and all that. You basically gave descriptions. So as a macroeconomist, he was schizophrenic relative to when he did micro. Basically, the notion that you used welfare functions to evaluate what happened, all this struck him as impossible. I think what Lucas and Sargent and others, Prescott, did was to say, no, let's try to build macro the way we build micro. Start with utility maximization for consumers, profit maximization for firms, the government. Let's assume distortions or no distortions. Let's see what happens, how costly it is in terms of welfare. Now, I think this has been extremely influential because if you look at what I referred to earlier, which is new Keynesianism, it basically starts with explicit assumptions at that time, where I think they lost the fight or they were part of a transition, is that they tried to explain the world in the absence of distortions. That basically the world was a competitive economy with constant returns on the production side, and there were no distortions, there were no nominal rigidities. And Prescott in particular pushed this very hard and created this school called real business cycles, which basically tried to explain fluctuations as equilibrium, desirable phenomena, where I think that most of the recessions and the expansions are partly undesirable. So what happened is they did this. It was extremely influential, both in terms of methodology, in terms of techniques. And we've, I think, adopted the methodology to a large extent, but put distortions, nominal rigidities, which I think is central to any explanation of aggregate movements. And we get very different implications. So I have a sense today that nobody believes in the neoclassical, new classical theory. But again, the heritage is very substantial in terms of methodology. Sargent has been enormously influential in terms of showing how you can use stochastic dynamic programming and all kinds of techniques, which 20 years ago were very hard to use because the computers were limited, but now can be used easily. So we can think about very complex issues, for example, the role of uncertainty on firms' decisions. This is a complex problem for them, but for us as well. Now we know we have the technique. So I would, again, I would give them credit for having forced a slightly different methodology from before.
Yes, and for a lot of people, for the students, Keynes seems to be the fiscal policy efficiency. Do you think that fiscal policy is still efficient? And when you see the situation of today, we have a higher and higher level of public debt and a lower and lower level of economic growth. So
again, you have to separate things out. The Keynesians were more confident about using fiscal than monetary policy for various reasons. So they focused very much on using fiscal policy as a stabilization device. Today, when we think about fiscal policy, yes, we conclude that monetary policy is very useful, but fiscal policy can help. There can be coordination between the two, and in a perfect political world, both should be used. Monetary policy has advantages, fiscal policy can work faster in some ways, and so on and so on. The issue is we're not in a perfect political world, and policymakers are policymakers. And even in normal times, they don't exactly act in the way we would like. There is this thing called debt bias, which reflects the fact that they care about being re-elected rather than how the economy of the world will look in 20 years. So they tend to finance too much through debt, not enough through taxes, leaving their successors debt. And we're seeing now, we've seen extreme examples of this in Latin America in the 80s, 90s. Now Latin America behaves better, but we see the issue in a number of countries. The US is one, and France is another. Different sorts of paralysis, different forms of debt accumulation, but in both cases, yes, fiscal policy, again, we can explain as economists what it does, which is not very good things, but we are not in control of fiscal policy, so fiscal policy is, at this stage, often used rather badly.
You trust more the central banker than the politicians?
As individuals, I love them both, but the status is very different. Central banks have been given independence, and this allows them to do what's right without worrying about the time in office. For example, they have very long terms typically, 14 years and so on. So they tend to act, I think, for the good of man or womankind to a large extent. Fiscal policy is a political activity by politicians who basically will, again, have a very different objective function, which is many of them try to do good, but they also care about staying there. And that leads to bias, which is much more pronounced for fiscal policy than for monetary policy. I would say monetary policy at this stage in the world is conducted in a rather good way. Yeah. The danger, as you know, is that they lose independence, and this has been a debate in the US recently, which is that if they lose independence, then the policymakers can force them to do things they shouldn't do. But as long as they're independent, and most central banks today are independent, they act reasonably.
And you don't think that the public debt is a threat?
No, I do. I do believe. Because again, fiscal policy is not conducted in a very good way in a number of countries. Now, on debt, I think the level of debt or the ratio of debt to GDP, I'll just call it the level of debt for simplicity,
Yes.
is not by itself, if it remains fairly flat, a catastrophe. And we see countries which have 60%, we see countries which have 120, we see countries which have 200, like Japan. And as long as it's flat, governments can manage, and they have to find the resources, but they can manage. What scares investors, and the investors are the holders of bonds, which have to be issued by the governments, is when they feel that the governments have lost control, and they look at the path of debt, expected path of debt, and it goes up and up and up and up. Then they start thinking, am I going to get my money back? Is there a point at which basically they'll have to declare default, or in some cases inflate away, and they start putting a risk premium in the rates that they require in order to hold the bonds. And we're seeing this, we're seeing this in France, which is paying more than Germany for its bonds, and it reflects the fact that investors are not incredibly scared. If they were incredibly scared, the rate would be much higher, but they're a bit scared, and so they want to make sure that they get a bit more in case it doesn't work. We don't see it yet in the US, but it's not inconceivable that we would. I think the investors think that eventually things will work out. But when this happens, and it can happen very slowly or in a very small way for a while, and then jump. And the reason is that this is a world of, to be a little bit technical, of multiple equilibria, which is that if investors think it's going to be okay, they lend, but if they think that the other guys are not going to lend, they want to get out, and then you get what we call a liquidity run or something like this, and the interest rate can increase by 5%, 500 basis points, nearly overnight. And we've seen this in the past. And then it's trouble, because the government cannot increase revenues by 5% of GDP. And so then there is default or there is inflation. So I think it's absolutely essential, in the same way as the inflation target is an essential part of monetary policy. It has to be credible. On the fiscal side, what has to be credible is that the government has a plan to go back to stabilizing the debt. Decreasing it would be even better, but at least stabilizing the debt ratio. And in the case of France, this implies decreasing the primary deficit from between 3 and 4% today to 0. When you have the kind of political landscape that we have, it's not obvious that it happens in time. So then you can worry that we basically are not able to reduce this primary deficit sufficiently fast, that France has to pay more, and then you start worrying.
Do you think that we need more inflation?
No.
4% or 5%?
Well, that's a different issue. I do not want to reduce debt, which is in nominal terms, by using inflation, because this is default by another name. It's not legal default, but it is default. And you pay a very high price for having screwed the investors. So you don't want to do that. There's a completely separate issue, which is what should the target rate of inflation be for central banks. And they chose more or less at random, but it looked reasonable at the time, 2%. Nearly all the central banks of the world basically have announced that they are going to go to 2%. Now, why is this maybe not the right number? First, because it's a number out of a hat. There is really no reason to think it's the right number, but it exists. The reason is what we call the zero lower bound, which is when you have inflation at 2%, you probably have the safe rate, the policy rate, at 3%, which means when there is a recession, you can only decrease the rate from 3% to 0. And it has turned out, as we've discovered, that that's not enough. You'd like to go much lower, right? So if you have, say, a target rate of 3% rather than 2%, when the rate will be 4%, you get a bit more margin to adjust. That's a completely different argument. It is universally, I think it's a perfectly good conceptual argument. Politically, all the central banks have rejected it, at least formally, by saying we've invested so much credibility in saying 2% that if we now say 3%, people are going to say, well, tomorrow I wake up and they say 4.
Yeah.
Now, I don't think the risk is there, but I'm not a central banker, I'm not in charge, and that's what they say. And therefore, I don't think we'll see an increase in the target. At the same time, the US is at 3% and is not trying very hard to get to 2. So although the official target is 2, we'll get there. So I think they realize that it's not urgent to go back to 2, and they're a bit more flexible than the official language is. But I think we're stuck with 2%.
Thank you. I give the end to Cristina.
We were talking about all these issues. What do you think we should do about inequalities in France? How we would reduce them? Because they have been rising since 2008.
So the easier part of the answer is, I think, that there is too much inequality, that the system generates too much inequality, especially, I think, at the very high end, which is, the subject of the Zuckman tax. It is really about these billionaires. And I think the system, as it is, tends to produce this, and will produce more of that unless we do something. The reason is that many of the new technologies or inventions have enormous increasing returns to scale, which means that if you have a good idea, then you can sell it to 1 billion people, in which case the profits, if you're the first there, are gigantic. They are partly distributed, but they also are reflected in the income of the people who had the idea. So I think we're going to see more and more of these billionaires or people with 100 billion or 200 billion. And from a moral point of view, you may think it's not right. From a political point of view, I think you should think it's not right, because I think it's very hard. Take the French context, in which we have to adjust the deficit by 3 or 4%, right? The primary deficit. We're going to have to ask people along the rest of the scale to accept sacrifices. There's no, either pay more taxes or have less generous unemployment benefits. There's no way to eliminate 4% of GDP just by being nice, right? Now, if you do this in an environment in which some of the people have hundreds of billions or dozens of billions, and you do nothing about that, I think you're running into political trouble. And, this is what the political discussion about the Zuckman tax is really about, which is people look and they say it's unacceptable, and the Socialist Party says, well, we have a partial solution. Now, how far can we go? These people are very mobile, and so there is probably a limit to what can be done. So I don't think we can solve the problem fully, at least at that margin, but the Zuckman tax struck me as a reasonable way of having them pay more. It is not going to solve the problems of France. It's not going to make income be equal. There's an enormous amount of progressivity in the tax system until you get to the 0.1 or 0.01%. So we're already redistributing a lot. I think we probably have reached the limit of what we can do. So there will be substantial inequality, and I think this inequality at the very top is a political issue. Another dimension in which it's an issue is, I see it in the US, is the influence of very rich people on politics. Now in France, we're partly protected from that, not fully. some magazines and newspapers belong to people with very clear views, political views. But in the US, the tech bros are basically incredibly influential. They write a check for the East Wing reconstruction of 10 million. They don't care, right? And they get them to have fewer limitations on the way we use AI, which I think is a big issue. So even if you don't accept the previous arguments, you have to worry about the fact that it may end up very badly.
Do you think that is the inequalities that have led to the election of Donald Trump? And do you think that multilateralism can go on without the United States?
I think the reason why Trump has been elected and the reason why far-right parties do well, and in some countries like France, far-left does decently, is anger. Mm-hmm. More generally, it's not just inequality, it's anger. It's the notion that the elites are not listening, which is a slightly different twist. It is that growth is mediocre. And as we know, we grew up seeing growth rates of 5%.
Yeah.
And we thought it was fine, right? Everybody got richer every year, it was fine. We're now in growth rates of
1% of growth.
Exactly. 1% in Europe, a bit more in the US. So if in addition, you're not in the right group, you may see totally flat income for decades. And I think this has created just very deep anger, which takes, and then the question is, who capitalizes on this anger to get elected?
Yes, of course. Yes.
And that varies. So Trump has found one way. The parties on the right have said, all this comes from immigrants, and they have capitalized on it, and they do well in many countries in Europe. I think they are now, it depends on what the result of the Dutch elections are today, but as of this morning, there were 9 countries where the far right was represented in government. So this is a real issue. The far left has said, oh, no, it just comes from the very rich, and we do a Zuckman tax, and it's going to yield billions. These are very simple messages. The Trump message is also very much, it's more complex, but it does the same thing. And that's where we are. And again, I hope we come to our senses. My sense is they do not have alternatives. Trump is doing fairly well, largely because of AI, which has not much to do with him. I suspect that, as I've said in the past, I think the far right at this stage in France has no notion of how to do economic policy, and they would probably fail at it. And then we can hope that reason returns and we look at other options. But I'm afraid that in a number of countries we have to go through this cycle of letting the others do it. I mean, if you look at Italy, Meloni, which comes from the far right, has had a perfectly reasonable centrist policy to a large extent. And that's one way maybe she will succeed in staying in power for a while. But we are in this very complex environment, and I don't know how it ends.
Mm. How about European construction? What do you think about the former communist countries? Have they developed as we expected? We have one of our campuses that is in Poland.
So Poland is the poster child. So if you look at what has happened in the countries which were part of the Soviet Empire and got their freedom in 1989, 1990, 1991, in general they have done well. And GDP of Poland has increased 5-fold since 1990. Mm. And if you look at the countries which have joined the European Union, they have done better than the others. Now, there's a bit of a reverse causality because maybe they were accepted because they looked better. But the fact is, I think that capitalism has done good things.
That's for sure.
But even there, even in Poland, where, you know, they have sustained growth, as we know, there is anger. We know that there is a prime minister who is a good guy and a president who, in my view, is not. So even there is anger. But in general, I think if your question is how have these countries done, they have done substantially better under capitalism than under communism or central planning.
That's for sure. But do you think now we are really an integrated European Union that that we have our chances?
Well, as integrated as 27 countries can be, with their own culture and their own rules and their own ethics.
Federative way.
I think it's worth it. I think that there are large benefits, but it's clear that it's very difficult to agree on some things, and the result is Europe is always too slow to respond in an environment in which it would be useful to go faster. So we saw this with Trump taxes, in which Europe kind of made a list of things they would do if Trump was putting tariffs, and then they gave up, and we accepted the 15% tariffs in exchange for nothing. Now, who is to blame? Now, people have blamed von der Leyen, but I think she's just reflecting the fact that not everybody in Europe was willing to fight. France was, I think, quite willing to go into a commercial war, thinking that there would be escalation, but we had tools to win it, maybe. Germany was much more worried because of its automobile industry, and the result is we didn't move. Does this mean that the European Union is a failure? No, it is still an incredible construction, and my sense is it's going to be, well, various things. The first thing, I think we have to change some of the rules. Unanimity has to cover much less of a spectrum, so we have to be able to give aid to Ukraine without being stuck with Hungary saying no. So I think we have to restrict a set of issues where unanimity is useful. We have already in the European Union rules a way of doing this, which is called enhanced coordination, in which 9 countries, at least 9 countries, but it could be more, basically agree to do something together, even if the others don't. And as long as it doesn't hurt the others, that's doable. The only issue is to have the right to do this. There has a unanimous vote to allow the countries to do that, which the result is it doesn't work. But to take another example of something we've done, and I think we have to do more of that, is Schengen. So Schengen doesn't have all the European Union countries in, and it has non-European countries in. So I think it's a kind of what I've called coalitions of the willing that we have to think about. I think Europe can play a central role, but again, it's going to be slower than we would like. But I think it's a good thing. I mean, in a way, it's a democracy. Democracies have weaknesses, but they have strengths. And, you know, as opposed to China, where China can act quickly, and the US, which can act quickly, but at the cost of many things.
And what about euro? Do you think there is a chance that euro becomes one day the reference currency?
Well, there's a big difference between the and a. No, it will.
It is already a reference.
It will never be, unless the US disappears from the map. It will never be the reference currency. It can be a reference currency, but it needs to do more to get there. This is something on which I'm working, and I've worked. We have a very strange financial system in Europe, which has problems, but you know, is rather sophisticated, which relies on a safe asset, which is the dollar and treasury bonds. it's a bit strange to think of a complete financial structure where in the end the asset which is considered the safest is outside and in a different currency. So what I have argued for, and I have written with a friend called Angel Ubide, is how we can get a Euro bonds market of the right size to compete with the US Treasury market. At this stage, the Euro bonds market is very small, and the Treasury market is roughly $30 trillion. The Euro bond market, which is not a single market actually because there are different Euro bonds with different characteristics, is about, I forget the number, but maybe 3 or 4 trillion. And many of these bonds have been issued, for example, in the context of the Next Generation EU program. And the plan at this stage, at least the official plan, is to let them mature and not be reissued. If you're an investor, you just don't like that. You don't like the notion. I would like, if I have a portfolio, I may want, 10% of my portfolio in 10-year bonds. But I don't want that the bonds to come to maturity and then I have to think about something else. So Euro bonds exist, but I think we have to do much better. And I think we can do it by basically swapping, I will not go into details, but swapping part of the national bonds into Euro bonds. So reducing national bonds, say 25% of GDP of national bonds is transformed into Euro bonds issued by the European Union. And I think, I will not go into the details, but I've worked a lot with investors, I've worked a lot with central bankers, and I think it's doable. I think there is large support for it, a bit less in Germany because they have a market for bonds that they like to protect, but I think it may happen, in which case I think the euro would be seen as a reserve currency. But again, I think the dollar is so far ahead that unless they do something really stupid in terms of fiscal policy, it will remain the market where many people go.
Yet for
and that would be good enough. I'm not asking for the euro to replace the dollar, but
yet it has been such a success in so little time. The euro before the sovereign crisis, it almost come to 30% of the reserves.
We can all agree that if there hadn't been the euro, and Trump had been able to attack each of the European countries separately, we would be in trouble. And we would have been in trouble in the COVID crisis and the energy crisis. So there is no question. The euro, again, is not a magic bullet, but it has done incredibly useful things. So I think we have to build on it, and I think we can.
So for you, the European Union is as useful for the former Western countries as for the Eastern?
You know the Draghi report and you know the Letta reports, and they both make perfectly good points. I think the point of the Letta report is that although it looks like a very large market, if you're an entrepreneur and you want to sell something to another country within the European Union, you have to basically, work with the regulation of that country. So there has been some progress. I mean, in terms of drugs, for example, there's a lot of harmonization. But it's true, it's not an integrated market. And I think we have to do that. If we do this, we're a market which is larger than the US. And allows us to produce on a very big scale.
Yes, it's the capital union and so on.
Yeah, we have to do more.
Yes, but we are on the right track, right?
But I believe in Europe at some fundamental level. Again, maybe because I know history. But it's complicated. Even in the US, in which the states are much more like each other in terms of origin, culture, you see the really strong fights against each other on various issues. And for us, it's worse because we are very different people to start with. But it's worth it. It's worth it. I'm sure we have to build on it, not retreat.
That's for sure. And ESCP is a very European business school, as we have campuses all over Europe, and we really have this European spirit. As this interview takes part with the BPCE, Banque Populaire Caisse d'Épargne Chair, I would like to ask you, what do you think about the role of banks in the economy, and if you have any opinion about cooperative banks specifically?
Well, I mean, obviously, given that they gave a chair, I think banks are doing a great job. But no, I think banks are essential, obviously, and we know the limits of banks, which is when it comes to venture capital, maybe, they are not the best, but...
They should be the best in venture capital? Is their job?
There's probably a division of labor. It seems to me that the kind of mindset which good venture capitalists have is a bit different from the mindset of CEOs of major banks. So I'm fine if it's separate. But we need more venture capital, it's clear. I mean, this has been discussed. If you're a startup, you just don't have access to the kind of infusion of funds that you would have if you're on the other side of the Atlantic.
But this is the case not only for European banks, it's also the case of the American banks.
But in America, venture capital is
it's easier to get. Yes.
No, I think banks do. Now, I worry a bit about bank regulation, not in Europe. I mean, there's a question about regulation more generally, which is how much is good. But, Europe is a fairly heavy regulator, the US a bit less. And again, the influence of money, what's happening with Trump now is basically not deregulation, but lighter regulation, in particular in the relation of what's known as shadow banking to banking. And that's very worrisome. So again, that's another example of money talks. And you want to make sure it doesn't happen. But I think the problem is more serious in the US than in Europe. In Europe, the banking system is not perfect. There are too many banks, especially in Germany and so on. But again, I think the issue is more to create alternative channels of funding rather than asking banks to do it.
I understand. Well, I thank you very much for the interview.